Hello and welcome. This is BQ Prime, and we are talking about earnings. This is Q2 with BQ Prime, and right now we are tracking earnings from Jupiter Lifeline Hospitals. We're in conversation with Ankit Thakker. He is the CEO of the company. Ankit, good morning, and thank you so much for joining in. Also, wish you a very happy Diwali. My first question to you is that it seems like a very steady quarter for you in terms of growth. If you could give us your initial assessment of how you think you've done and what we can expect going forward.
Hi, Agam. Happy Diwali to you too. Thank you for having me. So, this quarter, we have released our results for Q2 and first half of the year combined. We have a revenue of 264 crores this quarter and an EBITDA of 62 crores. The revenue is up about 20%, and the EBITDA also has risen in this quarter year on year. Occupancy levels also in this period have been higher than the corresponding periods last year, and so have the RPOPs.
Right. Ankit, a quick word on your margins contraction, because we are in fact seeing 200 basis points come off. Any explanation here? Is this a one-off, or is this something that we can expect to sustain over the next couple of quarters?
So it's about a 1% change in EBITDA margin with a growth in absolute EBITDA number, but a 1% change in EBITDA margin. So healthcare as a business does not tend very well to be monitored on with a microscope of few basis point of EBITDA margin contraction or expansion. As we analyze this internally, we think that there is nothing worth talking about or reporting, and in the subsequent quarters, if with similar fundamentals, even if there is a reverse trend, that is a 1% increase in EBITDA, it would not really be a cause of chest thumping, as the current thing is not a cause of stress within our system. Depending on the kind of procedures, surgeries, intensive care required by the patients, from time to time, small variations and fluctuations are known to occur. But fundamentally, in terms of utilization, in terms of occupancies, in terms of everything else that we track, we don't see any great cause of concern or anything worthy to report.
Sure. No, fair enough. I certainly take that point, Ankit, and I wasn't even trying to say or cause an alarm. I was just looking at the presentation that you guys have put up, and we are in fact looking at a 210 basis points contraction. So was just curious, is this, I'm assuming this is something which is regular, it's common, it's your regular expenses, which probably may have seen an up move right now, and which will eventually come off and settle down in the balance of this financial year. Am I correct?
True. So we added some beds in Pune in the early part of the year, and when you add beds, you have to equip them and you have to increase some fixed cost, but it does not get occupied on day one. So whenever we add beds, now that you want to go in detail, I'll explain you a little more. Whenever we add beds, we see this typically, that because of the increased cost associated with it and not getting utilized or occupied on day one, there's a temporary period of reduction in margins associated with increased costs. And as those beds start getting occupied, then the contribution kicks in and the margins pick up again. So this was something which was on expected lines as far as the performance or result was concerned. Similarly, in Pune, we also just this week have signed rate revision contracts with the insurance companies, which would mean that the RPOP should go up and we should be getting paid more for the same amount of work by the insurance companies. So going forward from next week onwards, this should also give rise to a higher ARPOB associated with a similar cost structure, and that would also contribute a little to improvement in margin.
Sure. Okay, so Ankit, let's talk about your new facility, which is upcoming in Dombivli. Can you tell us about the kind of capacity it will add, as well as the kind of investments you guys have earmarked in bringing it up? If you could just take us through those details.
So Dombivli, we are building a 500-bed hospital. It is the land is bought, the permissions have been secured, the excavation is complete, and now we are starting construction upwards on that project. In the next 2 to 3 years, that project should be commissioned and get operationalized and start contributing. As a budgeting, we have budgeted about 1 crore per bed for this 500-bed facility in Dombivli.
All right. And so at what point of time do you think that this facility would be completely operational?
So completely would obviously be ramped up over time. Phase 1 would get operational, as I said, between 2 and 3 years starting today.
Right. Okay. Coming down to a little bit more shorter term in nature, I see a presentation, you're at around 961 odd beds at the moment. Are you expecting to, or are you looking to add more beds eventually in the balance half of this year? And what number are you looking at if you are?
So in the next financial year, we could explore adding a few more beds in Indore. Pune and Thane, we have already added beds. So the Pune beds will have to get occupied now. But Indore has a current occupancy of 50%. We tend to add beds once the occupancy crosses 60%. So we believe that in the next year, it would be a good time to add a few more beds in Indore.
All right. And a quick word on your expansion plans in Dombivli again, because I think it's important to address this. I'm sure you guys are going to be also gradually be investing as you move into different phases in Dombivli over the next 2 to 3 years. My question is that you are expecting growth to keep up, so that you also see those expenses which are going towards Dombivli to keep up in terms of your bottom line. The reason I ask is a lot of investors would be interested in knowing how the EPS will move even as you make those investments towards Dombivli over the span of the next 2 to 3 years. If you can give us a little more picture of that.
Sure. So one major contributor to EPS or PATs is that after the IPO, Jupiter is now fully debt-free. We have paid up all our debt, and therefore the gap between the EBITDA and the PAT margins, which was higher till last year, will shrink in the times to come. So that should give rise to more free cash available in hand. That should give rise to improved PAT margin significantly and improved EPS margin significantly. So this has already been done. After becoming debt-free, we also are left with over 300 crores in net cash on our books. This cash is going to be used for future capex and future growth, including buying new lands for new hospitals and including funding the Dombivli capex as well. Going forward, as you said, the debt-free status also leaves more free cash in our hand every month. And because we are expanding on a greenfield way, that is, we are constructing and not acquiring, we don't need all the money on day one. So month on month, the cash which is surplus in our hands will be plowed back into the completion of Dombivli projects and into the growth of the future hospitals as and when they come up.
Right. Ankit, we've also seen an uptick in your average revenue per operating bed. What is that a function of when it comes to you all? And is there a likelihood that we can further see an increase in tariffs going ahead in the balance half of this year?
So healthcare inflation in India is a reality, and it has very low likelihood of tapering down, anytime soon. So RPOP should increase in line with inflation in the years to come. Whatever you think is the right inflation number to plug in, 5, 6, 7%, whatever you think right, you can plug that in. And that should be a RPOP growth for mature hospitals. So Thana and Pune, which are both mature, should see RPOP growing with inflation. Indore could see a little better RPOP growth if with the optimization of case mix. That is, when the hospital starts doing more critical care and more complex work, then the revenue per bed per day goes up, rather than when it is doing more secondary care and more routine work. So in the initial phases of a hospital starting, the critical care is lower in terms of percentage contribution to occupancy. And in a mature hospital, you start doing more strokes, more transplants, more surgeries, etc. So that also positively contributes to the RPOP. So Indore will see, besides inflation, a little bit of case mix optimization also kicking in, and Pune and Thana will predominantly grow with inflation.
Okay. All right, Ankit, we leave it at that. Thank you so much for joining us and taking us through the quarter's earnings. We wish you the best for the future. Thank you.
Thank you, Agam.